There are a lot of things going on in crypto right now, and one of the most important narratives we need to be following closely as crypto investors is the evolution of the regulatory landscape, particularly in the United States. This week, Gary Gensler, SEC chair, reasserts that every crypto is a security aside from Bitcoin, but lawyers disagree. Lawyer and Chief Policy Officer at the Blockchain Association, Jake Chervinsky, argued that Gensler's words or opinion are not the law. On February 26th, he said, "The SEC lacks authority to regulate any of them until and unless it proves its case in court. For each asset, every single one. Individually, one at a time." And if we reference the informational crypto market website, CoinGecko, in the top left-hand corner here, we see in their database alone, they are tracking 12,306 different cryptocurrency assets. The good, the bad, and the ugly about this reality is 12,306 lawsuits is a lot of lawsuits that the SEC would not have the resources to pursue. Good. However, until there is a robust regulatory framework for digital assets in the United States, the SEC will continue its war on crypto, whether it has the jurisdiction or not. Bad. And the unfortunate reality about the legal system in the United States is that most judges who ultimately decide the fate of outcomes of lawsuits are extremely lazy, which means the outcomes of current cases the SEC has brought against crypto entities like Ripple are extremely important. Ugly. Why is it so? However the Ripple case shakes out will create a legal precedent for how lazy judges decide the outcome of other crypto cases, meaning if Ripple loses, instead of judges looking at other cases with fresh, neutral eyes like they're supposed to, they will more than likely just reference previous similar case outcomes and make the same decisions as previous judges. Lame. So let's check out this Ripple versus SEC court case update as of February 26, 2023. Despite both parties in the Ripple and Securities Exchange Commission (SEC) case making final submissions and awaiting summary judgment, the main focus still lingers around the regulator's power in providing oversight in crypto alongside unsealing vital documents. Under the latest update, pro-XRP lawyer John Deaton has questioned a statement by the SEC chair, Gary Gensler, alleging that any crypto besides Bitcoin is classified as a security. It is worth noting that the SEC is suing Ripple for selling XRP as unregistered securities. It is also worth noting that Ripple General Counsel Stuart Alderodi has earlier insinuated that the SEC has minimal chances of winning the case at the Supreme Court based on historical outcomes. The SEC has lost 4 of its last 5 cases in the Supreme Court, thanks to the few that had the courage and resources to fight back against the SEC's bullying and clinging to stretch legal positions that were not faithful to the law, he said. As previously reported, the case received new rejuvenation after a journalist, Rosalind Layton, filed a motion to gain access to the Hinman speech documents. The speech was issued by the former director of the SEC's Division of Corporation Finance in June 2018 and could offer a clear representation of how the SEC classifies securities. Hinman noted that Ethereum and Bitcoin are not securities, and the same approach could be applied to XRP. Therefore, with Chair Gensler pointing out that only Bitcoin is not a security, the unsealing of the document becomes a significant part of the case. Elsewhere, defense lawyer James Fillon also revealed a new development in another long-running legal battle where Ripple has been facing a class action since 2018. In the matter filed in California, XRP investors sued the company and its CEO, Brad Garlinghouse, for selling XRP as an unregistered security and are seeking damages for the losses they suffered. They're requesting that the court declare XRP a security. So this is definitely a case we should be following closely as crypto investors. So the most important question we need to explore is, will the SEC and US ban and kill crypto? Hello, I'm Crypto Casey and welcome to another episode of Crypto This Week. Let's take a look at the global news stories and the state of the current macroeconomic environment. Please check out our sponsors, Masterworks, eToro, and Ledger. Build a balanced investment portfolio by diversifying into shares of iconic works of art with Masterworks platform. Diversify into the traditional stock market and ETFs with 0 commissions using eToro Exchange. And make sure you are taking complete control and ownership of all of your digital assets and cryptocurrencies by using secure cold storage hardware wallets like Ledger devices. Scroll down and use the links below to access the correct and official sites, as well as redeem any special offers they have for us. Sweet. The US government doesn't like Bitcoin because it's a worldwide asset gaining a lot of attention that they cannot control. So why haven't they banned it? Because they don't know how to enforce it. The nature of Bitcoin's underlying blockchain technology is that it is decentralized, which means no one computer, server, person, or entity can control the network. Anyone around the world can download the entire history of all Bitcoin transactions and then can also participate in verifying transactions by becoming a miner. So the only way to stop the Bitcoin network would be to destroy the whole planet at this point. I mean, look at China. They've been trying to ban Bitcoin for years, unsuccessfully. And we know they've been pretty successful at controlling things in their country. So what the US government could do is make it harder for us to convert our fiat US dollar currencies into Bitcoin by imposing restrictions on the amount of money we can transact on exchanges. They may do that, but at the end of the day, the cryptocurrency industry is a niche and growing facet of the larger global financial industry, and the US stifling growth and development in this sector would further put countries off of using the US dollar, and the big corporations that own all the politicians want to be able to seize any opportunity they can to make more money. There is a ton of money to be made in this new speculative asset class, and so they will pay for the regulations that will allow them to do it. Now, if the SEC were to go after other big cryptocurrencies like Ethereum, basically the only thing they can do is to try to find the Ethereum Foundation and try to force them to get compliant. And basically all compliant US crypto exchanges would have to delist Ether until they register as a security, which, like we've discussed, would just cause the US to fall behind in the new global financial and technological sectors. So the outcome of the SEC's case against Ripple is crucial because if the SEC wins, they will likely start going after the top largest projects like Ethereum, Polkadot, Cardano, and similar. But if Ripple wins, the SEC might back down a bit. We shall see in due time. Let me know what you think the outcome of the case will be in the SEC's next move in the comments below. Cool. Looking at another facet of the developing regulatory landscape, this week, US Treasury Secretary Janet Yellen says it's critical to establish strong crypto regulation. We haven't suggested outright banning. So yeah, everyone, especially the US, knows how much money there is in owning and controlling financial markets. So even if the US can't own it, they want some control over it in order to maintain power in the global financial system and make a lot of money, as well as big global organizations like the International Monetary Fund. This week, the IMF prefers to regulate crypto than banning it outright. On the sidelines of the G20 meeting in India, IMF Managing Director Kristalina Georgieva said the agency would prefer to regulate crypto than an outright ban. Cool. So all in all, I'm not too worried about any extremely bad regulations being imposed on crypto. However, even if the United States did impose extremely bad regulations on crypto, basically people living in the US would have a hard time investing, which we already kind of do because we don't have access to a lot of the exchanges because they don't follow current US regulatory requirements, and we are not able to create or invest in ICOs or initial coin offerings. Basically, we can just exchange our US dollars for crypto on KYC US compliant exchanges like Coinbase, Kraken, and similar. So bad crypto regulations in the US would mostly be bad for the US. And in the news this week, Europe entices crypto firms as US regulatory crackdown intensifies. The EU is pitching the region as open to crypto companies. The US is sending the opposite message with its crackdown. Uncle Sam may be left behind if Congress doesn't act soon. And also, in the news this week, Hong Kong courts crypto industry as other governments crack down. Chinese territory is seen as desperate to catch up with regional rival Singapore. So yes, the US market is big, and keeping them in the game would be better for crypto, but it wouldn't put an end to the crypto markets, as it's a global market that is traded 24 hours a day, 7 days a week, every single day. Crypto never sleeps. And other countries are motivated to become hubs for development and growth of the industry. What can we do as US citizens? Besides sharing videos like this and spreading awareness about Bitcoin and cryptocurrencies with everyone we know, we can also start exploring which people and legislation at both our state and national levels are pro-crypto and spread awareness about their stance for when the election time comes. And we can also identify which people are anti-crypto and try to reach out to them, maybe via Twitter or similar, to try and educate them about the importance of the US working to become an ideal global hub for crypto development so we don't get left behind. We also need to keep in mind who would be best in office when they try to roll out the US dollar as a central bank digital currency, which, if you haven't yet, check out this video guide about the implications of CBDCs in the US by clicking on the link above. So when election time rolls around, we want to be educated about which legislators up for re-election have as much as a politician can, our best interests at heart. For example, this week, Representative Tom Emmer says Fed must not create digital currency, surveillance state. Emmer has introduced legislation that seeks to limit the Fed's ability to issue a digital currency without additional oversight. Any digital version of our dollar must uphold our American values of privacy, individual sovereignty, and free market competitiveness, Emmer wrote on Twitter Wednesday. Anything less opens the door to the development of a dangerous surveillance tool. Though there appears to be some bipartisan consensus regarding the need for the United States to keep up with this emerging global trend, multiple American lawmakers, including Emmer, have voiced concern that the Fed or the broader U.S. government could manipulate control over a digital currency to gather sensitive transaction information previously held by private companies or unavailable due to the proliferation of cash. So, as you can see, the next 12 to 20 months with a huge election year ahead will be extremely crucial for the cryptocurrency industry in the United States. And if you haven't yet, check out this video about how this could be the perfect storm of events for crypto by clicking on the link above. Amazing. So, in the news, it seems like we've still got some polar opposite opinions about whether we are currently in a recession is coming, a recession is almost over, or that the entire global financial system is on the brink of collapse, as the number of banks facing a liquidity crunch is growing. So, with the Federal Reserve continuing to increase interest rates, making it more expensive to borrow money, more and more people and companies are starting to default on their loans. And as we've been discussing on the channel, the Fed will only stop raising rates once they hit their 2% inflation target, or whatever they possibly might change their target to, or until they break something big in the economy, which could be closer to happening than most people think if banks are having liquidity issues. And something most people don't realize is that if the Fed does end up causing a major financial collapse, banks are legally allowed to seize all of your money in your bank account. Scary. So if we are on the brink of a financial meltdown, a widespread banking collapse could happen, which means any cash we keep in our bank accounts could be at risk of forfeiture. What can we do to mitigate this risk? We need to diversify. So if you're in crypto and have diversified maybe into the stock market or real estate, consider adding a completely uncorrelated asset class like works of fine art with Masterworks. Art is one of the oldest asset classes there are. In fact, Sotheby's is the oldest company on the New York Stock Exchange, nearly 275 years old. So people have been trading art for centuries. And typically only the ultra wealthy have had access to fine art investments until now. Masterworks removes the barriers we would otherwise face if we tried to invest in art on our own, because the costs are extremely high for the average investor. So they take this very large asset class, which is roughly $1.7 trillion, and make it accessible to a wide range of investors with their platform that transforms physical art into share-based ownership. Here's how it works. Masterworks uses their expertise to select and buy art that they believe to be investment-grade paintings. Then they file it with the SEC, similar to how a company goes public. And finally, they sell the shares of the painting, which allows people like us to own fractions of pieces of fine art. So this is the first opportunity for anyone to invest in multi-million-dollar artworks. And Masterworks has become so popular that there is a waitlist to join. However, if you use the link below, we can skip the waitlist and start diversifying our investment portfolios into this unique asset class. So scroll down and check it out. Awesome. If you would like to learn crypto profit-taking strategies before the bull market really starts raging that can change your life, check out this video. If you would like to finally have that eureka moment about how cryptocurrency wallets, seed phrases, and private keys work, check out this video. And to skip the Masterworks waitlist, click on this link on the screen. Like and subscribe for more. Be safe out there.